Okay, that was Jayesh with the ET Now Insight. Let's change gears and talk about some stocks in the Fatafat mode, the stocks which you need to keep your eye out on. First up, Hero Moto. Well, the numbers delivered by the company last evening were a tad bit dismal. I would say the margins compressed quite significantly. The con call happened today around noon. They said that the company has rationalized and deferred capex, and they're now looking at 600 crores for this year. Their main priority at this point of time is getting volumes back. Many dealers, they say, have reached 70 to 80% of pre-COVID retails. In fact, if you look at their dealerships, 90% of them have already resumed operations. The capacity ramp up, the management says, will be gradual, but reopening of vendors and suppliers has already been achieved. So there's no roadblock in that front. Given the increase in agri activities, the fiscal stimulus, which is also largely agri-centric, the management is very positive that rural economies are likely to aid the recovery big time, and they might actually end up doing better than urban economy, at least over the short to medium term, where they have some visibility coming in. Another stock to watch out for will be a JM Financial on back of that QIP news. They've launched a QIP and the indicative issue size right now is close to 770 crore rupees. The QIP has been launched at a floor price of 66.72 rupees a piece, and that's the development and that's the news update which is keeping JM afloat in trade. Teamlease, another earnings candidate. This one actually on the flip side is been a weak quarter for Teamlease. They have reported a loss of 29 crores. The revenues have come in at 1345 crores, but it's the EBITDA and the operational margins which have been quite weak for the company. EBITDA is down 23%, coming in at close to 20 crores, and margins have come in at 1.5% versus 2.2% on a yearly basis. So a weak quarter really as far as Teamlease is concerned. Next up is a GCPL. The stock perhaps is reacting to the management and the top deck change that is likely to transpire. Vivek Gambhir has resigned from the post of MD and CEO with effect from 30th June. He has essentially cited personal reasons for that. The resignation, of course, comes in as a big surprise to the street and to analysts who've been tracking the company. The company also, at the same time, one must know that it has been underperforming for the last 2 years. So that is something that also is hurting the analyst view. The change could be sentimentally negative as there have been some investor-led concerns. And after a long time really at GCPL, a professional MD is being replaced by the promoter family. So it's a big shift happening on that front as well. Nisaba Godrej, who was in the board as well, she will now be replacing Vivek Gambhir after the completion of his tenure as the MD CEO till September 2022. She has been closely involved in reinventing GCPL for many years. So now she will be given the charge. Moving on then, you have a Yes Bank, another stock in focus. Madhu Kapoor and other family members have withdrawn the petition that they had filed with the Bombay High Court. The petition was essentially filed over dispute of nomination of people on the board of the bank. So that has now been withdrawn. So you have a Yes Bank as well, buzzing in trade. Lastly, another earnings candidate for today. You have Shriram Trans Finance, who will be handing in their report card. AUM growth likely to be muted around 5 to 6%. Weak AUM growth perhaps due to contained sluggishness in demand and lockdown. They expect margins, the street expects margins to contract because of the impact of higher cost of funds. Disbursement growth also likely to be soft because of CV and auto sales being very weak, and because of the lockdown as well for quite a significant part of the quarter gone by. Asset quality likely to decline owing to cash flow stress for transport operators. So important earnings to watch out for. Shriram Transport very much in focus.